What's up, everybody? It's your host of the Mint Tea Podcast, Wyatt Graves, and I'm coming to you today with a great conversation with a fellow GoBro who is in multifamily. Not only is he in multifamily, but he's got 1,400 doors, and he has scaled his portfolio in a short amount of time. As you know, I'm on a journey to build a portfolio of 25,000 doors over the next 10 years and not lose my mind in the meantime. So talking to people like this that are in the trenches, on the front lines, doing it is so helpful. So if you are interested in starting your own multifamily portfolio, if you're interested in goal setting, if you're interested in hiring other people, we cover all of those topics in today's conversation. With that, let's get right to my conversation with Gary Lipsky. Gary, what's up, man? I'm so excited to have you on the show today. I know that you're in the multifamily space. I obviously have a great passion and hunger to scale my business in the multifamily space. So I'm looking to learn a lot from you and your experience today.
Well, I'm happy to be on. Thank you for having me.
For sure, man. I know that you've been on a couple of podcasts here even recently as you've been sharing your story and your message. So I've got to learn a little bit about you through other podcasts in advance of our conversation today. But you and I are both in GoBundance together and reached out to have each other on our show and make this introduction. So why don't you, just for the sake of telling our listeners, my listeners, a little bit about where you are with your multifamily and your journey to get to where you're at?
Yeah, so currently we own with hundreds of investors about 1,400 units in Arizona. That's over 9 properties. So big properties, 150 units or more typically, we like to buy. Been doing this full time since 2017. And I have a team of 5 people that work for me. And, started investing way before this. And, it's a journey to get to where we are, but it's been a great learning experience, and we've added a ton of value to so many different communities and brought in so many different investors to help them build wealth over time.
Man, I love it. I'm in a mastermind with Jeff Woods, and it's all around AI and leveraging AI as a strategic thought partner. And it's really sort of accelerated my passion, but also my strategies in terms of scaling. And so when I started to use AI to interrogate my strategy and share my goals with AI, what I learned is that I wasn't thinking big enough. And so after many conversations with AI and figuring out, okay, this is what it takes, this is what's possible, my goal quickly grew to scaling a multifamily business to 25,000 doors over the next 10 years.
Wow.
So I'm on a quest to figure out how to do what AI is telling me is possible. And along that quest, right, I get to talk to people like you that have been there, done that, maybe before AI, to really poke holes in your strategies of acquisitions and operations and things of that nature. So definitely want to talk about that. But talk to me about the rate at which you've scaled. Like, did you just start with a couple hundred in years 1 and 2 and 3, and then it's kind of hockey stick growth over time? And then if you will, tell me a little bit more about the kinds of properties that you're buying. Are they Class A? Are you buying at a discount? You forcing appreciation? Tell me about that too.
Yeah, so we bought our first property in 2019 in May. It was a 42 unit we bought for $1.65 million. We should have bought the whole block at that time. And then in November, we closed on a $15 million deal. So really scaled up right away. And again, 2019. And so we thought we were rocking and rolling, like we're going to do tons of deals. And then COVID hit. And so it really wasn't until about 13 months later did we do another deal. So it's been ups and downs. It hasn't been a rocket ship. We've only done 3 deals in the last 2.5 years just because there just wasn't that many good deals out there. And we're not going to do deals just to do deals. So it's always about quality over quantity. But been nice and steady pace we've done. And so we've done a total of 13 deals over the last 6 years, I guess. And we hope to do 4 to 5 deals a year. But again, we've got to be able to find good deals and be able to raise the capital for those deals.
For sure. And talk to me about the kinds of deals those are. Those class A, B, C, what do they look like?
So in the beginning, it was big value add, class C.
Oh,
and
wow.
So now we've kind of graduated to more B class, A minus, a little bit more cash flow, little bit less value add. And cash flow is good for us to balance kind of what investors want these days, and to keep cash flow coming in as well. We find that that's the greatest opportunity right now. Although, I mean, we almost bought a huge fixer upper about 6 weeks ago. We loved the deal, tremendous upside, and someone was just outbid us. We were a little surprised how hard they went with hard money and whatnot. And so, I mean, we lose deals all the time. That happens. But we're always trying to evaluate where we are in the market, where is the greatest opportunity. And so we feel like the class B, A minus is really the best opportunity right now because of where cap rates are sitting.
No doubt. And are all these properties in your backyard? I know they're in Arizona. Is that just where you live as well?
So I live in Los Angeles, in Manhattan Beach.
Okay.
All the properties we've done have been in Arizona, almost all in Tucson. We've done a couple in Phoenix. We started really in Phoenix, and the market was so much on fire that we kept buying in Tucson, where we got a much greater discount. And so we really like that market. It's been really good. I think a lot of people make the mistake of not focusing on and chasing so many deals across all these different markets. And you can't be really good at that. You're putting your investors at risk. You're at risk. So we like to focus. So our focus is the Southwest, where we have landlord-friendly states, business-friendly states, above average population growth, and job diversity. So it really gives us nice tailwinds. So if the market turns on us, we still have some tailwinds. And if the market heats up, then we really can take off. And we've been able to take advantage of that when we've sold the bulk of our properties.
I love that, man. Talk to me about your team and really the scalability of your team. I did a walkthrough of my properties yesterday, and look, we have 175 doors in our pipeline. Like, we own 175 doors. So we're at about 150 that are open and ready for occupancy as we're building some of our new builds. But once they're all built, it'll be 175. I took the day yesterday to go put my finger on the pulse, walked my properties, and man, I got to tell you, I left with I don't know where to draw the line in terms of being a perfectionist and what I expect, right? Like, we had turnovers, and so I toured some of our vacant properties, and we've had them painted. And the paint, like, they painted the weather stripping around the door. That's unacceptable to me. We had some gold brass door hardware. Why are we still doing that, right? And so it exposed to me some of the details that are missing from our SOPs. And one of the units still had a lingering smoke smell. It's supposed to be non-smoking. Obviously, it wasn't. They've moved out, so we need to get an ozone machine in there. So I got two problems I'm trying to solve, and I want you to help me solve them with what you've already done. One is the staffing and how you scaled your staffing so that they operated the properties the way that you need them to operate, and sort of what's your level of, expectation on turnovers, and maybe I'm being a little too picky. And then the second thing is deal flow and underwriting. We get, like, people know that I'm in the space, so they're sending me deals all the time. And again, that perfectionist trait in me comes out, and I'm spending a lot of time sitting on deals because it takes me a long time to underwrite to make sure that we should move forward or not. So staffing and underwriting. Talk to me about those two departments, if you will, relative to how y'all have been able to scale from nothing to 1,400 in such a short amount of time.
Yeah. So I think part of our success has been not being vertically integrated. A previous business I had was we had over 700 employees and 700 independent contractors. And it's an HR nightmare. So I knew I didn't want to be a property manager as well. So I rely on a third-party company that they manage about 55 properties in that area. So I get their expertise. I get their economies of scale when I'm buying goods, and I get their labor. Now, there's still plenty of turnover that we have to deal with. And whether you own that company yourself or you're outsourcing it, that's just the nature of the beast. And that attention to detail is hard to find with staff. And so setting those expectations up from day one is really, really important, and walking those units on a constant basis. We were just out in Arizona and we walked all of our properties and looked at the turns and yeah, there was, we opened up a closet door and there was paint that was peeled off from the door because they shut it too soon, and there's always things that we are looking for. And so we're walking that with our regional manager, our maintenance supervisor, and our property manager. So they know what we're looking for. And we've done this walk before with them, but it's just constant reminders to really reiterate what we're looking for. And you can have, all these SOPs and whatnot, but they're still going to forget. There's still that margin for error. They aren't the highest paid employees. And so it's hard to, you can set the standard of perfection. You're not going to necessarily get it all the time, but we keep pushing them and obviously try to catch them doing something good. That's really important, and get that ownership thinking. I think that really, really helps. So as far as what my team looks like, there's 6 of us. From the investing standpoint, we have a couple of investor relations people. We have 2 operations people, and 1 person that does acquisitions and asset management. And then I help that person as well with deals and whatnot.
Hold on. That went kind of fast, and I'm taking notes. You got 2 investor relations folks.
Yeah.
And then you got, what were the other 2?
So one's like an EA/operation. So she handles all the behind the scenes stuff. So she'll send out all of our newsletters. She'll post our social media. She'll handle all the Zapier from our CRM to our website, and all the other our portal and our investor portal and all these different things in the background. She handles all that, even some basic bookkeeping as well. And then I have a higher level operations person too. So he'll help manage some of our AI kind of plans that we want to do, OKRs, objective key results, some higher level stuff. He'll handle some of the fund management that we do. So they're critical in our day to day. And the beauty of it is they're all investors in our deals. So they're very invested in what we do.
Now that's your 2 investor relations people that you just described?
That's the whole team. But yeah, we have 2 investor relations people that they'll help. They'll do some webinars. They'll bring in investors. They'll nurture them, answer any questions, stuff like that. Because we're always seeking more investors so we can do more deals that we like.
Yeah. So go back on an overview of your team of 6 people total. You got 2 investor relations, and then what were the other titles or departments?
An operations director and an operations manager, and then a director of asset management / acquisitions. So this guy, I've been through a few of people in this role, and I finally found someone that has the experience, because before it was mostly leveraging my experience, but I wanted someone that I can learn from and that's going to run that division. And we found someone in October, and he has a ton of experience, and I'm able to just let him really own that department. And so I'll do site visits with him. I'll be on some calls, but he's really managing the day-to-day in that department.
And is that kind of like a property manager? Did you reference him as a property manager in terms of he's managing your property management companies? He's the boss of the third-party contractor.
Yeah, he manages the manager. So he'll secret shop. He'll go through all the financials. He'll have the weekly property calls. He'll keep them on point. And it's a huge job managing all of our properties, maximizing our NOI, making sure tasks are getting done, any kind of concessions or moving the rents up, whatever it is, he's making sure everything is to the T and mining that data that we have.
Man, that's so that makes me ask the question: who's doing all the accounting?
Yeah, so the property management company, they'll do all the accounting from the property side of things. So we have access to those reports, and they'll send us those reports. We'll go through it with a fine-tooth comb, because there have been times, I mean, it's just a simple mistake where we're getting charged for something else or whatnot, or they didn't take something off, stop some form of advertising that we thought was supposed to be stopped. And so it's just going through all of that information, making sure we do our draws when we're supposed to, managing our cash flow. Those are really critical tools, but the accounting team for that property management does the basics, and then we go through it, making sure everything is all correct.
So at your level, which I would just call HQ, between the two investor relations, the operations director, the manager, the asset manager, who's managing investor payouts, return on their money, equity position, syndication? Who's doing all that kind of accounting?
Yeah, so mostly it's our portal that's doing a lot of it. So our operations manager will send me a form, and I'll kind of go through it of like, okay, we're doing 1% distributions on a monthly basis for one of our funds. So she'll handle that every month, making sure that gets paid. Our quarterly distributions for a property. Hey, we were supposed to put out 2% this quarter. Are we on track to do that? Yes. Okay, so then she'll run the spreadsheet, making sure it's all correct with our portal, and then send that out. And
that's your operations director?
Our operations manager.
Oh, wow. Okay. And what kind of software is your portal being ran on? What program are you guys using?
We use Cashflow Portal.
Okay.
We really like that. We've had a number of investor portals before, but this one we like the best. Quite honestly, she's the one that loves it. So if she loves it, then that's good, because I don't know barely how to use it. That's her role, and that's what's most important. If she
all right,
it.
so that rounds us out to you. What's your role in all this? What are you playing?
So I kind of work with everyone, kind of brainstorm different ideas I have, particularly when. Also on acquisition side, brokers will call me a lot of times and say, hey, I've got this deal I'm going to be bringing to the market, running the numbers. That relationship, lenders, again, it's probably half my asset manager and me, but I'm the one that really pushes them. If we need to close on an investor that is looking to invest a very large amount, they frequently like to talk to me. So I certainly make myself available, work with our team on social media, work with our IR team on different webinar ideas. So really working with everyone. But I would say, I'm always, before we go after a deal, I'm signing off on that deal. And I know it from head to toe, because I'm putting in a significant amount of my own money. And before I accept anybody's money, I want to make sure I really know that deal inside and out.
Got it. So let's talk about the way that you scaled your team. When you bought that first 42 unit deal, what'd your team look like? And when did you start
to grow?
It was just
me and a business partner at that time. That's
okay.
it. But over time, he was a little reluctant. He barely had any savings and whatnot. So he really pushed off when we hired our first hire. And so I really was pushing for that, to really take off those $10 tasks, those $20 tasks. Ultimately, we split after a couple of years later. And so our operations manager was our first hire. And then my acquisitions person. And I was handling all investor relations. And then eventually I hired an investor relations director, and then an operations director, and then another IR person over time.
I love that, man. Love that clarity. Hey guys, if you've been a listener of my show for any length of time, you know that I attribute a lot of my growth to learning from the guys inside of GoBundance. If you think that GoBundance is a tribe that you might be interested in joining, then reach out to me. Go to WyattGraves.com, connect with me. I'll reach out personally with you and answer any questions about GoBundance to see if it's the right fit for you. And so are you the general partner? You're the only general partner and everybody else is limited partners in your syndications? Yep. Got it. And are you running a fund for every property? So it's multiple syndications or what?
So investors, in the beginning, we just ran all individual syndications. And then we started two funds. On one of our funds, so you can invest in a single asset or you can invest in a fund. And our current fund has 3 deals in it, and we'll put one more. And then we also have a preferred income fund that pays out 10% every year. And that's just a different, some investors want the upside and the bonus depreciation, and some investors just want that consistent cash flow that's a little bit higher. So we kind of offer a number of different things based on investor tastes. And some people will invest in both things,
Love that. So let's talk about that for a minute. What kind of people give you money? What kind of people are out there that are investors in your projects? I'm raising money, you raise money. If somebody's listening and they have some extra money, they're sitting on cash, like how would you talk to somebody that's questioning whether or not this kind of investing is right for them?
So the first thing we do is make sure they understand, have they invested in a real estate syndication before? Because it's different. It's not liquid for the most part. And so making sure they understand how the cash flow works, what a pref is, all the different terminology. We want to make sure they fully understand before they invest with us, and it's not their last penny. Because then if you're having to sell your deal and overhype, because I've seen it way too much from other people, you're going to have a lot of problems with those investors because you've overpromised and underdelivered, and we'd much rather underpromise and overdeliver. Be conservative so that the expectations are set up right from the start. So we want to educate them, and if they fit the criteria that it's a good investment for them, then they go to our investor portal. They sign the docs. But obviously, actually before that, we want to make sure that they've watched the investor webinar that we've done and read through all the docs. The docs are super boring. They're long. They tell you all the reasons not to invest. But we want to really make sure that they understand them, because this is an investment. You could potentially lose your money. Now, we've never lost any money. We've only had high returns, but the potential is out there, whether it's with us or someone else. You invest in enough deals, you're eventually going to lose some money,
For sure. I like that. So last question that's on the top of my mind is back to the acquisitions and underwriting. What's that deal flow look like for you? And while we're talking about deal flow, just if somebody has a deal in Arizona or the markets that you're in, how would they send you a potential deal to look at?
Yeah, so where we're buying, it's going to be 150 units or more, Class B or more. And really the brokers are the only ones that have those deals because they're constantly connecting with the owners. I've never had someone send me an off-market deal that wasn't a broker that it panned out. Like, so I don't even like.
So deal flow doesn't exist outside of brokers right now.
Yeah. If I was doing small stuff, then yes, yellow letters might work, cold calling, stuff like that. But for the quality that we're going after, it's really broker relationships. And I've been working with the same brokers for many, many years. They know I can close. I've closed in the toughest of times. So they're going to, I'm on the top 10 list of theirs. I'm one of the biggest owners in Tucson. So when they have a deal, they're going to call me and let me know. And whether it's off market or on market. And usually these deals are on market, and that's fine because at the end of the day, the price will dictate what the price is. There's going to be no surprises. Even if I bought something off market, a fair price is going to, dictate it. I'm not stealing any properties. It's what I can do with the property that's most important. And that's where we've done very, very well across our portfolio. we've averaged a 40% bump in NOI in the first year. And I'm
Wow.
really proud of that statistic.
You should be. That's great, man. That's awesome. So you recently wrote a book. Tell me about that. What prompted you to write the book? And I know you have an event that's upcoming, probably will happen after this episode airs. So if somebody wants to come to that event, attend, whatever, talk to me about the book, the event, and all that kind of stuff that you have going on, man.
Yeah, it's called Invest Smart, Spotting Red Flags in Real Estate Syndications. And it was written because so many people have gotten burned over the last few years on jumping into deals. There was in 2021, particularly 2022, there was a kind of fear of missing out. People were just throwing money at deals, at anyone like had a massive social media following, whatever, without knowing if they actually had a team and they did it full time, and if they had operational staff, asset managers and stuff like that. So, and I know when I had done some of my investments, I made plenty of mistakes. So I talk about red flags from the syndicator, the operator, and also from the deal itself. So how to spot them. So I hated to see people losing money and getting burned by bad investing. And so that also led us to create this Invest Smart Summit with not just talking about wealth, but Sahel Bloom is one of the speakers, and he's speaking about the 5 types of wealth. So, we're talking about health and mindset and all the different ways to invest in yourself. And so that's what the summit's going to cover. We have a couple of great panels, one on investing, personal finance, an LP panel that's probably invested in well over 200 deals. Tim Story, a great motivational speaker, will be speaking. Kathy Fecky on economics. So a wide range of topics, and it's completely free.
Wow. How do people find out about that event? Where do they go to register?
Yeah, investsmartsummit.com. And I'll add also, it's a no pitch. Even if it's free, we're still doing no pitch. That's something that's very important. Now, certainly the speakers can have their own pitches on the website page for the conference, if they want to sell a book or whatever. But it's just great education. And I'm looking forward to learn from our amazing speakers. And we're going to offer a ton of value for anyone that wants to sign up.
Man, that's pretty crazy. That's pretty phenomenal. I love that. Talk to me about the rent rates and just rent rates in general right now, the economy and the people that are coming through your properties and renting. Obviously, you're in the space. I'm in the space. We're talking to people. I just had a conversation this morning with somebody that's got this is how uninformed I think some people are, which is really surprising. House note is less than $1,000 a month for a 2-bedroom, 2-bath townhouse that's owned. Now, they have an interest rate that's really low, and they want to sell that house and buy a new house or rent and try to stay around the same house note. It's not going to happen in today's market. It's just not going to happen. We've got other people that are paying in our spaces as low as $850 a month, or $800, I should say. And based on our rent rates and the performer, like we had to go up to $850. And some of those residents are really having a hard time being able to pay that extra $50 a month. So what are you seeing in the market right now? And how are your projects really performing relative to it? Really, as a real estate salesperson, we've always said, why rent when you can own? And for the first time in my career as a real estate salesperson, it is cheaper to rent than to own. So how's your properties performing, and what are you seeing in terms of the next 12 months?
Yeah, so we're kind of coming out of a U curve where we had some really, really high rents for a long time, and we've had to lower rents and offer a lot of concessions because I'd never seen so much price sensitivity before in my career, where if someone is offering, $150 less or free move in and everything like that, people would move. And it doesn't make any sense to move just for that small amount, because the cost and the time to move, it just isn't worth it. But we've had so much price sensitivity, more concessions, more delinquency than we've ever seen in my career. Now we're coming out of that. that has been steadily decreasing for a number of months now, and we're able to push some rents as we got our occupancy up. So I expect us to kind of continue on this kind of upswing, as we've seen a lot of absorption across the country with so much new units coming to market, mostly in 2024. Now you'll still see it in some markets like some Texas markets and Phoenix still this year, but all that supply that came to market had to be worked through the market. And so now the potential to kind of get back to increasing rents is on the horizon. And that's what a lot of real estate investors are hoping for over the next couple of years. Because certainly for those that bought in 21 and 2022, they lost a ton of value on those deals, and they really need that rent growth to help them get back to where they were, given that expenses have certainly increased over the last few years as well.
No doubt. No doubt. So talk to me about goals, vision. How big are you trying to grow to? By when? What's that look like for you?
Yeah. So we don't put down, we want to get to $500 million or $1 billion assets under management, because I feel that number is driving the sake of doing deals just to do deals. And so for us, it's always about quality over quantity. We don't mind waiting a year if that's what it takes to find a really good deal. So that's the most important thing. But we want to continue to grow. We've invested a lot of money into the team and our systems. So ideally, we will be doing 4 to 5 deals a year if they make sense. That's where our team can handle, and we can scale up if need be pretty easily, because we've had a good amount of people in place for a while and built up systems. And there's always room for improvement. I'm Kaizen is very important. I know that's a key word for you as well.
Yeah.
And
yeah.
We're constantly looking for that little improvements over time, and it has a huge payoff. So it's a tremendous value that I want all of my employees to have. Because if we're not getting better, we're getting worse.
Yeah, for sure. You're not growing, you're dying. What about vertical integration? Are you ever going to explore that? Go back there. I know you referenced a maintenance person, didn't you? Talk to me about that and vertical integration versus managing property managers. What do you see that?
Yeah, I don't. Like, even today, I got a text from my asset manager, and we had 2 people that due to health reasons, they quit. And so it's like, that's just another, like, I just don't want to be in the HR business, and I'd rather have someone else deal with those headaches and just manage a much smaller team, having managed a massive team previously. Now, even with those 700 employees, I only had 4 direct reports, and that was really important because, it was like a pyramid. I managed the 4 and
Sure.
they managed down, but I just want to stick to our core strength and leverage the strength of others and that provide the property management, so we could stay more nimble and have less overhead and less headaches.
Yeah, I love that, man. Dude, this is great information. We are so in the thick of scaling and growing, figuring it all out: acquisitions, underwriting, financing, bookkeeping. We just made a big hire for our team in the form of a controller. We've always had a bookkeeper level staff. And man, I don't have nearly the investor relations that you guys have, right? We just play with such a small amount of investor money. But to grow or to scale, I needed to make sure I'm tempted to say that P word, perfectionism again. I needed to make sure that we had every piece of information one click away, and that we had a human being that I could count on to make sure that if it wasn't one click away, that they could find it. And so we upgraded our accounting team and hired an in-house CPA, who is a controller, senior accountant. That's just been a massive upgrade. We're leaving Jeff Woods' mastermind last week on AI with some of the top C-suite people across the country with huge organizations. We're talking, I sat next to somebody that's running a $3.2 billion company in the steel industry, and how they're leveraging AI. I came out of that mastermind with the notion that I need a chief technology officer because AI is just so available and it's a game changer in so many ways at a high level and at a granular level. So Thursday of this week, I'll be meeting with my fractional CTO that I've brought on, in addition to a full-time in-house marketing agent. So between accounting, marketing, and technology, I feel like we are poised to really go after investor money, right? So capital flow. And then I feel like we will be able to operate really well because we can, I mean, sales and marketing is everything, right? We have done a great job of staying 100% occupied across my portfolio, which is phenomenal. But we've got to take another step further, and that's maintenance, which is why I was asking you about those walkthroughs and what that looks like. We do self-manage. Everything is in-house. I have a sales background, so I like looking at the pipeline. I like looking at who's put in their notice to leave, and how many leads do we have that we can assign to that opening, right? So for every one vacancy notification, we have 6 leads in the pipeline, and we take those 6 and we assign them to that apartment, right? So we work those 6 to fill that apartment. So I like all that, but it is a lot. It's a lot, right? So our next step, marketing, CTO, and then the maintenance person. I've got an accounting meeting after this so that we can really take the steps to hire that maintenance person. So it's a lot. This is great, man. And I love knowing that we have you as a resource inside of the GoBundance tribe to really lean on. What else did we not talk about, man, that you think is helpful for the people that are listening that are either deal flow, capital flow, talent flow? Anybody, is anything that would help you or serve you from our listenership? How can we do that? How can we serve you?
Yeah, well, first of all, I love the fact that you're investing in your team and hiring all these experts, because I think that's like the number one mistake people, don't do is investing in their team, and they try to manage everything themselves. And you need to hire experts to help you, particularly with your vision for growth. And I can't emphasize enough being in those, mentorship groups, those masterminds, because that'll 10x your investment easily. So I'm excited to see where you're going.
Look, everybody always says this is the season I'm in, Gary. People always say you should hire people that are smarter than you. That's such an easy statement to say. And yet, as somebody that started from the bottom, like I was a real estate agent that was lower middle class when I became a licensed agent, which now is like 25 years ago. But like I've always been the doer. I've always been the integrator. And I know how I like things done. And so when you hire somebody that's smarter than you, they're smarter than you on paper. They're smarter than you with their resume. But when they show up and they start doing things their way, and it's not your way, I don't give a dang how smart their resume appears that they are. It ain't your way. And you have a choice to make. You either live in faith and let them roll with it, trusting that their way is better than yours, or you try to hold on to the reins. And I've been coached too much to know that I need to just let go. And that is the most vulnerable, scary spot that I have ever been. I can sign my name on debt. I can buy a deal. I can go get my hands dirty. I can show up at 6 a.m. and work. I can work 24 hours straight. I can do all that. But letting those people do it their way is one of the hardest things I've ever done. So I'm doing it. I'm doing it in faith that it's the right way.
Yeah, whenever time we hire a new person, for us, we look at it as an opportunity to grow and learn from their experience. And If it's not better than what we've done, then we won't implement it. If it has, and I hope they bring a lot to the table, then it's great. It's a huge win for us.
For sure. Man, this is awesome. Thank you for your time. I really appreciate it. If I can do anything for you in South Louisiana, if you decide to, our market, it ain't Arizona market, that's for sure. But if I can do anything for you inside of GoBundance or South Louisiana connection, whatever, man, I'm here to serve.
Appreciate it. Same here, always.
Awesome. Thank you so much. Hey guys, Wyatt Graves here. As you know from previous episodes of this show, I'm on a mission to grow a business that has 25,000 doors, a holding company of service-based businesses surrounded by a protective moat of a personal growth and development educational company. With that being said, I am looking for deals, I'm looking for talent, and I'm looking for capital. If you're interested in connecting with me, go to my website, wyattgraves.com. Send us a deal. I will be sure to include you in some way, shape, or form. Whether you're a real estate agent and you want to be my agent, you're welcome to be my agent if you bring the deal to me. If you're not my agent and you bring the deal to me, we will still get you paid somehow, some way. If you want to work inside of our world, then drop me a line, send me an email, connect with me. We're interested in attracting level 5 talent. And then finally, if you are an investor and want to invest your money, not only to get double-digit returns, but also to have real impact inside of the communities as we raise up the level of good life living throughout our properties with our residents, with our employees, with our communities, then I want to connect with you. Go to wyattgraves.com and fill out the contact information, and I will personally be in touch with you so that we can figure out how we can shake the trees together and win together. wyattgraves.com.